Hello, welcome back. I like taking a look at the market trends module that I have developed here for our exclusive tool. This one is very useful because it tells me what is currently trending in the markets. And as you can see right now, Tesla, Mueller Automotive, GameStop, and a company named NILE, and it's actually BitNile Holdiings. And this company seems to be trending right now, and this is actually updated by the minute pretty much. It shows you the last hour trends and it gets updated all the time if you refresh the page. And so, as I'm seeing here, this company seems to be trending right now. And so I want to potentially take a look in an attempt to discover a potentially hidden gem or a potentially hidden trap. This is why I want to examine these companies as they are trending in the market. And you will see here that BitNile Holdings is basically a penny stock right now. This is a stock that is trading less than $1. And you will see that it's actually down almost 78% from its 1 year high. This is an insane decrease in price, of course. Now, we do want to examine what the company is doing financially because just the decrease in price doesn't tell us much. But we do know that the company has been having a little bit of an uptrend right now. You can see it in the stock chart as well. Now, the P ratio of the company points to a company that has negative earnings and steep decline as well in terms of earnings. And the same thing with the price to free cash flow ratio, although better free cash flow than the net income. Now, the thing that is a very worrying sign, and this alone would have me not invest in the company, is the insane increase in outstanding shares. And this is why I like having this awesome chart here, and generally speaking, huge charts from 5 years before, because you can see what the company's outstanding shares were and when the massive increase happened. And if you have invested here or here, you have been insanely diluted. Look at this percentage, I cannot even say it. It's like that huge. And so this is like 1,000,000% or something. And as a stockholder, you hate to see that because you are looking at a board, a company that doesn't care at all about investors. They just care about increasing capital, and so they keep on increasing the stock shares and the supply of stock, and thus massively diluting you if you were holding stock beforehand. Now, there has been a little bit of revenue growth, although with this kind of company you would expect much better, but insane loss in terms of net income and free cash flow growth. And as I was looking at the company itself, it looks like it's a Bitcoin mining operations company, so it has to do with crypto for sure. Now, I will have a separate section that I'm working on right now. It's not available yet, but it will have all sorts of information about the company. So there's going to be a separate tab about the company analysis as well. In this one, we're going to be having transcripts, key executives, all information, institutional holders that can actually help us decide and actually see what's going on with the company. So this is a very interesting thing that's going to be added to the tool very soon as well. Now, if you take a little bit of a deeper dive here, you will see that the company doesn't have a lot of debt. That's a good thing. But the net income margins are horrible here, although they are making some gross profit. And the price to book ratio, which is very low, so the company has a lot of assets compared to price of the stock. But that probably has to do with the fact that they have been increasing their stock their stock shares massively, and so they made a lot of money here, a lot of capital. And this is why you see the price to book ratio being that low. Now, if you take a look at the social trends for the company, you will see here that today we are having an increase in stock tweets, which is the more definitive spot about a trend. It's what you want to examine. Twitter is mostly about the news, so if something comes up, this tends to have an increase, but overall during the day, stock tweets is the definitive spot. And this is when you see an insane increase and can tell you that the company is trending. This is very useful for if you are trading the company, really, like day trading. Now, we can see also in the stock news, for example, we can potentially find some information. This is a thing in the penny stock department, as you can see, is mentioned as 10 top penny stocks, and there are news around that, trading penny stocks, and things of that sort, and you can find some information about why the company is soaring. This is very handy here because you can very quickly see the headline and see that after the company said its EV charging subsidiary Turn on Green will be acquired by BitNile subsidiary Imperalis. So, this kind of gives you a very quick way to discover what's going on with the market news about the company. Now, the thing that I want to examine, of course, is taking a little bit of a closer look at the income statement, and you will see that the revenue has been actually increasing And of course, it's a good thing, but the net income has been decreasing, and as the revenue is increasing, net income is decreasing. That's not a good thing to see, really. And the balance sheet of the company will tell you the story that we examined earlier. You will see here, and this is where I'm going down to 171 million of additional paid-in capital just for 2020. And take a look at that. If we go back to the stock analysis, the company has a total market cap of 70 million. So they basically just just have let me find it over here, additional paid-in capital of 171 million, which is like 3 times as much as their actual market cap. This is a massive red flag here. This is a company that runs on investors' money pretty much. And total liabilities of the company at 26 million, more than less than the total assets. Again, you would expect that with all this accumulated capital from investors. And so the total equity is higher because of that. The cash flow statement, though, will tell us a story of a free cash flow that keeps decreasing here, and not looking great, really. So we could always take a look at the stock evaluation tool here, but as you will quickly see, most values are actually in the negative here, and especially the net income margins are very, very negative. So unless these get into positive territory, this kind of model doesn't make a lot of sense, because the company is not profitable, and so you're gonna have to speculate a lot in order to get any results here. And so basically we're looking at a company that's not making money from operations, and so that's not good to see, and you cannot really use a discounted cash flow model for that in a sensible manner. And so what would I do with this company? Now, this is why this kind of tool really helps very, very quickly evaluate. The moment I see this, I'm out immediately. I don't need to see anything else. Just this insane dilution, there's no way I'm getting into the company for the long run. Now, I could get into the company for potentially trading it during the day. That's a different story. I could definitely see myself doing that. But I definitely wouldn't hold the company for the long run, and it's not even doing well financially. But this amount of dilution here, it's a definite no. And again, this kind of tool can really give you the information immediately, and you know that you have to be out. Like no return on equity, no returns really. I mean, yeah, this is just horrible here. Again, you may want to take a look at the trends and keep looking at the trends to see whether you can actually day trade that and make some money from trading the instrument. But remember, when you're trading the ticker and not the company, really. And so it doesn't really matter what the company is doing financially. So I hope you enjoyed the video. Hope it helps you a little bit and gave you some ideas about what's trending in the market right now. And if you did like it, please leave a like and let me know. And subscribe if you're on the subscriber already. At some point I will be giving access to this tool, so you may want to stick around. And in the meantime, while you're waiting for this to happen, take a look at the video that I made earlier. It's about 5 undervalued stocks that will be probably doing very well in the next few years, and I would myself buy in 2022. Thank you for watching this one, guys, and I see you very, very soon. Bye-bye.